Global capital is constantly on the move, searching for stability, growth, and opportunity. In recent years, one region has stood out as a major destination for investors worldwide: North America. From institutional investors to sovereign wealth funds, capital is increasingly flowing into markets across the United States and Canada. But what's driving this shift? Why are global investors choosing North America over other regions? And what does this mean for the future of global finance? To understand this trend, we need to start with one of the most important factors in investing: stability. In a world marked by geopolitical tensions, economic uncertainty, and rapid policy changes, North America offers something rare: a relatively stable political and economic environment. Investors value predictability, and both the United States and Canada have long-standing institutions. Transparent legal systems and regulatory frameworks that protect capital make a big difference. This sense of security makes the region highly attractive, especially when compared to emerging markets or regions experiencing political unrest. Another key driver is economic resilience. Even during periods of global slowdown, North American economies have shown an ability to adapt and recover quickly. Strong consumer spending, diversified industries, and innovation-driven growth have helped maintain momentum. The U.S. economy, in particular, remains one of the largest and most dynamic in the world, offering a wide range of investment opportunities across sectors like technology, healthcare, finance, and energy. This diversity allows investors to spread risk while still capturing growth. Speaking of growth, the technology sector plays a massive role in attracting global capital. North America is home to many of the world's leading tech companies and innovation hubs. From Silicon Valley to emerging tech centers in cities like Austin and Toronto, the region continues to lead in artificial intelligence, cloud computing, and digital transformation. Investors are not just looking at current profits, they are betting on future disruption, and North America is seen as the epicenter of that innovation. In addition to technology, the strength of financial markets themselves is a major factor. U.S. stock markets are among the most liquid and accessible in the world. This means investors can enter and exit positions easily with minimal friction. High liquidity reduces risk and increases confidence, especially for large institutional players managing billions of dollars. The depth and sophistication of these markets make them a natural destination for global capital. Interest rates and monetary policy also play a crucial role. While rising interest rates can sometimes deter investment, they can also attract capital seeking higher yields. In recent years, North America has offered relatively competitive returns compared to other developed regions. Another important aspect is the strength of the U.S. dollar. As the world's primary reserve currency, the dollar provides a safe haven during times of uncertainty. When global risks rise, investors often move their money into dollar-denominated assets. Let's not forget about energy and natural resources. North America has become a major player in global energy markets, especially with the rise of shale oil and natural gas production. This creates opportunities in both traditional and renewable energy sectors. At the same time, global challenges are pushing capital towards safer destinations. Economic slowdowns in parts of Europe, regulatory crackdowns in some Asian markets, and ongoing geopolitical tensions have made investors more cautious. In conclusion, the surge of global capital into North American markets is driven by a combination of stability, economic strength, innovation, and financial market depth. In an uncertain world, investors are gravitating toward regions that offer both safety and opportunity. And right now, North America checks both boxes.